Mavericks. It is nice to see you here for the Currency Room. The first quarter is over. I cannot believe it. This year has just flown by. But first quarter is in the books. We're looking now towards the second quarter. And the month is March. And the month of March is over as well. So we will be doing payouts this next week to all of our profitable traders. All right, well, let's talk about last week's events. Equities remained bullish. We've been leaning more on the bullish side, and equities definitely performed. Equities had about a 6.4% gain, but if you take a look at like the Qs, the NASDAQ 100, they were up closer to 18% in the first quarter. So we've got a lot of momentum right now in the stock market. And everything that was pushing the market down over the last year has mellowed out. Bond yields have mellowed out. We were up above 4 just 6 weeks ago. We're now hovering around 3.3, 3.4, and it just can't move any higher. Gold is holding in. The dollar remains low. So everything that made the market bad, the equity markets bearish last year, has pretty much dissipated. So now we're seeing a much better risk-on environment. We've seen the cryptos looking much, much better. And I made a crypto trade this week and did very well in it because, again, this is where the type of environment you want for cryptos is here. We didn't want to be in cryptos last year whatsoever. It wasn't the right environment. We're now starting to see the environment that is actually really ripe for good crypto trades. Let's go through the calendar. Really only two big things happened last week. We've got Australian CPI lower than expected. And look, we've heard from the RBA. They've been a little bit more dovish than everyone else lately, which has been putting some pressure on the Aussie. This number is not going to help the RBA get more hawkish, probably even more dovish. We do hear from the RBA this week. We will see what they say, but right now inflation is running below expectations in Australia. And then last is the Friday Core PCE Price Index. This is the Fed's preferred inflation measure, and it was less than expected. And the market really liked this. The market ran into this number, and then when they got the number, the market said, yes, we love it, and they even went a little bit higher. So overall, let's take a look at the charts. Let's take a look at the charts. Let's take a look at the numbers, and then we can put last week to bed. As you can see, the S&P up about 3%. The world index did a little bit better. Cryptos as a basket were flat, but we're going to take a look. Litecoin dragged everything down. If you just looked at Bitcoin and Ethereum, it was a good solid week for those. Gold was flat, but again, flat at these multi-year highs here in gold, and oil had a nice bounce back this week. Let's take a look at the charts because the charts have broken out to really, really substantial places. Last week, we talked about how we had this range where we were simply trading between the 20 and 50-day moving average for about a week here. And we said during that time, there was no clear call. We had to wait for a break one way or the other. Well, we got the break. We got the break to the upside. We broke out of the top of that range, and we even broke out of the high we had back in March. 4160 is the next target here on the SPX. So you can see we've got a ways to run. We did a lot of churning here. We're now starting to break out. So bullish in equities for sure. We come over here to currencies. We can see that the yen did not like the bullishness in the currencies. We've been talking about this, that if you're trading the yen, you're trading the equity markets, and strong equity markets are bad for yen. If we think that the equity markets are going higher, we still think that's going to be bad for yen. CAD was the outperformer this week, up 1.29%, and then everything else was pretty muted this week, up or down about 0.5%. I've been liking the euro lately. The euro was a nice trade this week. It wasn't the strongest, but it was still a nice trade on the week. I've also really liked Bitcoin and Ethereum, and you can see Bitcoin had a nice move up this week. Look at Litecoin. It's not one that we trade all that much. So if you take that one out, pretty much cryptos had a nice week as well. So overall, if we take a look at where we are in this market, we are clearly breaking out. We're clearly breaking out, making a run. We have been in negative or zero territory in our market outlook for about the last month. Really, ever since we dropped below the 50-day moving averages back here in the 1st of March, we've said, hey, we need to be less bullish. We are now to the point where we can go ahead and say, let's turn that bullishness back on. Ankit, what is your call here on equities? Where do you think we go here over the next couple of weeks?
Hey, Rob. Well, I definitely have a split outlook here, and here's the reason why. We've seen a very nice move here. And of course, everything on the technicals is looking like it wants to break out and test the resistance. But I also want to pay attention to the seasonality pattern. Again, very similar thing that we saw last year. If you look at the charts last year, just in month of March, we saw a rally of 11% in S&P, and we got above the 20, the 50, and the 200 moving average. So the real question is that, after this quarter end where, we see a lot of money sloshing around and getting put to work, can we take that momentum from the first quarter into the second quarter? So if you take a look at last year, that did not happen. That was a fake rally, and then we sold off. So what we need to see in this situation is that we're seeing a very similar scenario, but what we need to see is that do we hold these levels? Because if it holds the levels, I think then we are setting up a stage for, a further breakout to the upside. If we turn around and actually give up this level, then I will be, taking back some of the bullishness I have here. So again, for now, momentum is strong. I just need the next week confirmation to see if this momentum from this week gets carried into next week. So I think we are at a crucial point here, but there's no doubt that there is a lot of bullishness across the board, especially we saw in the tech sector here. So carry forward of this momentum will be tremendous to the upside if we can carry that forward.
I totally agree. I actually think the bigger gains are in the past for equities. I just think the equities are going to chug higher here. Like I said, we've had a nice big runs here off of the bottom. I think from here on out, we get more of a +1 type of creepy market that just creeps and creeps higher without any real huge gains. It's not going to be a fast move, but I do like equities to the upside here. But Ankit's right. If we turn and give it all back and we go back into that range next week, then all bets are off. But that is how the market works, and we will react to changes. This here is the crypto basket. Now, we like to look at things by a basket because this kind of eliminates like what one is doing versus the other, and it really shows us what an asset class is doing as a whole. However, this week is the week that I don't like it as a basket because we saw the drag that Litecoin had on it, and that drag is actually making it to where it looks like cryptos aren't really breaking out. We'll take a look at Bitcoin. We'll take a look at Ethereum. We can see that they are looking much better on the chart. So I'm going to go ahead and kind of disregard this basket chart here and say, let's take a look at things individually. This week, the first week of the month, we know what that means. Tons and tons of news. So let's get through the schedule here. We hear from our first central bank on Monday night. Now, it's on the calendar for Tuesday, 12:30 RBA rate statement. However, that is Monday night for most of us here. And one of the things Ankit pointed out, actually, Ankit, why don't you let everyone know about this?
Yeah, certainly. We have the time change, the daylight saving change happening in Australia and New Zealand this weekend. So again, whenever that happens, we need to keep an eye on the schedule because the timing will change. So in this situation, it looks like the RBA will be at 11:30 instead of 12:30. So that'll be a Monday night. And same thing goes with the RBA rate statement. So I'll recommend checking that on Sunday just to make sure you got the timing right for the daylight savings.
Yes, thank you so much. As you mentioned, we do have RBNZ on Tuesday night. So Monday night, RBA, Tuesday night, RBNZ. We will be meeting live as a firm to trade the RBA rate statements in real time. So come join us for that. We will not be meeting live for the RBNZ statement. We have a few things late in the schedule here. The equity markets in the US will be closed due to a bank holiday. So I guess it is going to be across the board in Europe, and in the US, and in Australia and New Zealand. We have a holiday for Good Friday. As you can see, on Thursday, Canada has said, well, let's do our report on a day when the market is open, which is smart. Well done, Canada. So Canadian employment Thursday morning while the market's open. The equity markets close on Thursday. And yet the US says, you know what? Let's still release our report on Friday. Now, let me tell you why I really like this and I'm really excited about this. There's no other games to play. All the other markets are closed. The only market open on Friday is the currency market. I love that. because that almost guarantees that if there is some sort of move that's going to happen from this, it is going to be exponentially larger than it would have been because there's no other place to play. We will be meeting live on Friday morning to trade this. I'm very excited about this Friday's potential for a nice trade here. So while I think it is kind of stupid that they're doing it, I'm actually quite happy about it because I do think it lends itself to a better trade on Friday. So let's kind of go through this week. We hear from two central banks, the RBA, the RBNZ, and then we have Canadian employment on Thursday and U.S. employment on Friday morning. I think after that big report comes out, I think there's not going to be much left to look at on Friday. Let's break down all these currencies one by one and score them all. Starting off with Bitcoin. All right, Bitcoin, really nice high base here. The only question is, when does it break out and run? We had another little try on Thursday, fell back down. Look, high bases, you don't really know when they break out. One of the things we do like to look for is this 20 period moving average. A lot of the time, we'll put some pressure on it. So we might get one or two more candles sideways, but when this 20-day moving average actually knocks it, catches up to it, that could be the impetus for the breakout here. Right now, there is no velocity, so there's no real great trade right here, right now. But this week, I've got Bitcoin high on my list for things that I want to trade. Next up is Bitcoin Cash. You can see Bitcoin Cash is not close to breaking out. It's not close to doing anything. So I'm just going to put it on the shelf and ignore it. Ethereum, actually looking better than Bitcoin. So if I had to trade one currency here in the cryptos, it would be Ethereum. It's looking a little stronger. You can see we're getting a better close on Friday than we are, and we're getting some velocity here. We're getting a nice breakout here of this high base. So Ethereum is number one, Bitcoin is number two, and then you can see Litecoin. There's no reason. There's no reason even to look here until it can prove to us that it's going to do something. There's no reason at all to even look at trading Litecoin. So Ethereum and Bitcoin in the cryptos. Let's take a look at this dollar here. Now, last week, I know, Ankit, you were very clear on your call on the dollar. Basically, you're saying it wasn't clear and that it's more likely to simply go nowhere or drift a little lower. Do you have any update to that?
I mean, I wish I had a better update on this, but I feel like we're in the same boat as we were last week. I mean, if you look at the price action, we are still holding that 50% retracement from that move low from February to the high in the March. Now, let's take a look at other areas. Are the bond yields showing us anything? No, they're almost stable now after being so volatile during this little short banking crisis. Now, we take a look at the rate expectation. We are sitting at 50-50, meaning that 50% thinks that we'll be holding, 50% thinks that we'll be raising by 25 basis points. So, there's not a whole lot of forces that could really move the needle on the dollar. So I think the next shoe to drop would be the employment report. I think that could provide a catalyst for the dollar to move along the lines with next week we have some ISM numbers and manufacturing and services number. What I'm looking for is those data to provide me a catalyst. But again, this is a very slow churn, and I like to focus on things that are moving rather than, looking for this break, which might or might not happen. So I think we probably have a better idea next week when we get some data out for this to kind of move higher or lower.
I totally agree with your call. Look, I've traded dollar. Most of the pairs I've traded over the first 2 months of this year have been probably more dollar trades than anything else. I haven't looked at the dollar in about the last 2 weeks, and I'm not looking at it until it shows me it's going to do something. As Ankit said, don't trade anything that's not going anywhere. Here we have the yen. Now the yen it's right in the middle. So technically speaking, and Ankit, you called this best last week. You said you think the yen could be traded both directions, long and short. So as you can see, we came up here to this long-term resistance. We hit it. We're back down. We're now right in the middle of the range here. I agree. I like the yen short here, but it's not I like the yen short here because I think over the next 3 months it's going to drop. I think I like the yen short here, meaning if these markets keep going up, I think there's going to be some good shorter term opportunities for a 1-day drop, or kind of like we got on Wednesday, Thursday. We got this 2-day drop and then stabilizations of price on Friday. So I think what you want to do is anytime you see this yen rally, I think you want to sell yen. What do you think, Onkit?
I would agree. I mean, like I said, this yen is so much correlated with the risk on or risk off sentiment. One thing I do want to caution is that use proper risk management on this, because this is a wild one. We have seen some big moves that happen both ways in yen crosses. So yeah, as much as we like it, I think what we need to pay attention to is what's the overall markets are doing, and then trade it accordingly. So this is one of those currencies that if you are not looking forward to trade volatility, then you're better off looking at some other pairings. But I do like it. This is still, again, trading in a wide range. I mean, take a look at 2023. This thing hasn't gone anywhere. I expect this to not go anywhere, but in between, it's just going to go back and forth between these range bound price actions. So that's what I'm expecting. We are at the middle of the range right now. If we get at the bottom of the range, I will then, be switching the outlook to, just to trade that range instead of trading a direction.
Great call. Totally agree. All right. The Swiss franc has been stubbornly strong. And again, a few weeks ago, you could have made the case, as their banking system was in serious collapse, that the Swiss franc would be weak, but it wasn't. It strengthened. Overall, it's like Swiss franc is going up. I get it. It's a +1, but it doesn't excite me at all. It doesn't make me say, oh, this is going to be a great opportunity. So for me, I'm going to go try to look to find something better. If I can't find anything better, maybe I'll take a look at a Swiss franc long, but let's see if we can find something that's moving better. Oh, and we did not have to go far, both figuratively and geographically. The euro, it looks much, much better. So you can see we have spent about 8 days just reaching around these highs on euro. I like euro for a breakout next week. What's your call, Ankit?
Yeah, I mean, I would agree. I mean, if I take a look at it, if you want to get away from the dollar and the yen, I really like euro and pound. And if you recall, like, it's an opposite of what we saw last year. Remember last year, Aussie held in, Kiwi held in, but then the euro and pound just got slaughtered. Now I'm seeing the opposite here. And I think this is what you got to pay attention to, is that where is the path for least resistance? And that is to the upside. And if you take a look at its counterparties, other currencies are doing the opposite. They're actually doing much more, on the relatively weaker side. So I think this is a great opportunity to not only just stay focused on euro dollar, euro yen. I think it's a good opportunity to take a look at euro or pound against the Aussie and the Kiwi, because that's where we are seeing the relative strength and weakness. So I do like it on a further upside. These are, again, not they're not exploding higher, but if you just take a look at any pullbacks that you buy in these kind of moves, have been a decent opportunity. So I do like to follow this for the next coming weeks.
Totally agree that euro and pound is where you want to focus on your longs. And when I take a look at the pound versus the euro, it's even stronger. So I've got to rank pound as my number 1 currency going into the start of next week, with euro number 2. Coming over here to the CAD, take one look at the CAD. We have gone nowhere. We tried to break down over the last 2 weeks in CAD. We bounced back last week right to the middle. I'm not going to try to figure this out. I'm not even going to struggle to figure out CAD. Maybe after their employment report on Thursday, I'll come back, but not interested. This is where the
Rob,
weakness
let me add some hope in the CAD here. I just want to add a couple of my little Canadian cents here. So, Canadian dollar has been one of the weakest among the other currencies. I mean, since November, this thing hasn't gone anywhere. But there's a couple of things that I like, especially with this week's price action. On a weekly percentage gain, this was the biggest weekly gain since May of 2022. Now, is that an inflection point? Are we about to see something turn here? So I'd like to use that as a benefit, use that as a bit of a guide here, and see the next week follows that sort of price action. Secondly, I think we are also in these seasonality patterns where, Aussie and Kiwi do really well in the first quarter. But in the second quarter, if you go back even like last year, CAD did much better compared to the others. I think the CAD has a chance here. Again, technically, it's not giving us an indication, so it's just my outlook. I will definitely need more technical data for this, but I just want to say that I like CAD more to the long side versus the short side at this point. So next week, my bias is to the upside, but again, using more confirmation, we need to get above these congestion zone here to get a further rally. But the fact that on velocity, not only we rallied, but we're closing at the highest of the range there, I do like the fact that this has a chance to run in the coming weeks.
Look, I'll take your hopium on the Canadian dollar. But as always, I need to see the price action. And you're right, and you covered that. I think it's worth noting and worth looking for, but I'm not going to make any moves on CAD until I see the actual proof that it wants to break out of its range, which it's still got some work to do for me. In the meantime, we've got weakness in the Aussie. So Aussie is trading below this support line. It's now low basing here. I fully expect it to take another leg down this week. We do have RBA on Monday, so I'm not going to do anything on it until I hear from the RBA. But after that, on a breakdown, I can absolutely look to be short Aussie. Kiwi isn't as weak, but we are still in this negative descending triangle pattern. Eventually what happens, I always like to talk about these are like a bouncy ball. A bouncy ball drops, has a little bit smaller bounce, a little bit smaller bounce, a little bit smaller bounce, and then all of a sudden it rolls off the end of the table. Not there yet. We're at a 0 and 0, but definitely looking at it. So when you take a look at all of our currencies here, right here, right now, my favorite play is actually Ethereum. It's my favorite play for going into the first part of this week. I like Euro and I like Pound quite a bit, but Ethereum is going to be my top pick on the long side. Short-term velocity, where's the velocity, is really nowhere. It's really not anywhere. So as much as I like things like Ethereum and the Euro going into the start of next week, I'm going to be sitting back at the first part of the week. I'm going to be trading much more in the later parts of the week because right here, right now, there's not a lot of velocity going on here. So let's take a look at some potential trades and some pairs that I think are going to be good trades this week. So I'm going to look at my favorite currency at the moment, which is Ethereum. Overall, we are still in this high base here. Until we get a clear out of the top of this base, which is right around 1845. We tried to poke our head out on Thursday, didn't quite get there. So for me, look, I like it. Everything looks good. I'm ready to go. It's just, I need this thing to break out. I need this thing to break out. And we've seen these cryptos try to break out several times and it gets sucked down every single time. So on a breakout, I am not going to be taking a full position because I fully expect there to be maybe another false breakout, just like we had on Thursday. So if you take a look at Thursday, we had this little poke above it. You could have gotten triggered then, it sunk right back down. I don't want to take a full position because I think there's very easily another false breakout or two before it really breaks out. So what I want to do is I want to take maybe a third of a position, a half a position. So if it does break out and pull back, I'm not in a world of hurt and I can sit through that. And then when it breaks out again, I can take another third of a position. And if it fails that time, pulls back, I can tighten up my stop. I think you want to be cautious of these little false breakouts that pops up above. But I'm telling you, what's going to happen is one of the times it's not going to be a false breakout. And it's going to move and it's going to take off. And I think this is a really long high base that can deliver some really good upside potential, possibly even up to 2,000, but the entry is going to be tough. So I think what you want to do is you want to scale in your entries. Take a little bit of positions. If it breaks out and fails, wait for it to break out again. Take another position so then you can sit through these maybe one or two little false breakouts, and then when it does break out and run, you're in there and you didn't get stopped out. So this is going to be a tricky play here as far as when to get in because I fully expect there to be another few false breakouts. But just take a little bits at a time, wide stop at first, another one. Then when it does break, that's when you want to pile into it more. All good. What about in cryptos? Do you think Ethereum is the best place to be?
I mean, so far, I think Ethereum has some catch up to do with Bitcoin, and I think that's what we're seeing here. So I do like Ethereum. I think I like both Bitcoin and Ethereum. But again, if you are thinking that Bitcoin has run quite a bit, I think Ethereum is just catching up to it. So outside of these two, I don't like any of the cryptocurrencies. So I think we got to stick with the major ones.
Awesome. My favorite Forex trade for the week is Pound Aussie. So we take a look at Pound Aussie on a daily chart. You can see the daily chart, it is clearly broken out, and we're just chugging higher. We're just chugging higher, and we now have a 4-day high base. So you can see we've been basing here for about 4 days on a daily chart. So same thing here. The only question is, when is the breakout? When is the breakout? I'm going to give the same advice. At 185, we've had a couple of times, 1, 2, 3 times where it broke out and fell back down. So how do you trade these knowing which one's the real breakout? Guess what? You don't know which one is the real breakout. You'll never know. I've been doing this for 25 years. I still don't know which one the real breakout's going to be. So what you want to do, you can play this one of two ways. I do like to take positions at the low of the base. So if it does break out and run, I'm in it. And I'm in it at a very comfortable place. But if it does come up here, hit resistance, come back down, I'm very comfortable sitting through that. I'm very comfortable just waiting for this thing to break. You take some positions, some small positions, like a third of a position on a breakout, and if it falls back down, look, then you're able to sit comfortably through that pullback until finally at one point there is going to be a break. So I like this 185 and above, I think is when you enter with some pyramiding. And I also think if it pulls back down to below the 184, I think this is where you start to take a look at some positions to get in just off the bottom of the range. So I like Pound Aussie best. What else are you looking at this week, Onkit?
So next week I have two of these boring plays that you will call it, but I'm just paying attention to relative strength and weakness. So my premise is going to be around RBA and RBNZ. So I really like to pair this against the CAD. So how about take a look at Aussie CAD? If the CAD does advance next week, I mean, this is again showing me a clear relative strength and weakness. I just want to point out that, we saw this big move in November, and November till January, we have seen a nice rally. So if I take a look at, a risk to reward and sort of relative strength and weakness, I do like these plays, especially going to next week. If I can get a good gain in Aussie on RBA and I can hold it through the Canadian point report, I think that would be the best case scenario. So I really like it here. It's slowly drifting lower. What I'm looking for is a bigger move. And same thing goes with Kiwi CAD as well. And Kiwi CAD is not as aggressively weak, but Rob, if you want to point out to go to the daily chart and zoom out, I mean, look at that consolidation. 2023, this thing has gone sideways for the most part. And if the Kiwi fails to rally, again, this week was a great example where things could have rallied, like the equity market's rallying. None of these currencies rallied. So if the CAD has a chance to rally as we start the new quarter next week and we start to see some rotation happening, I mean, Kiwi CAD has some, area to drop, going down to like 83 and 82. So risk to reward ratio, I like it. I like the fact that they're not going wild, like, if they're like the yen crosses are. So, if they can just consistently follow towards the downside, I do like it. So again, this is what I like going next week because the RB and RBNZ, and I do not expect for those banks to be hawkish. I think the new theme that we are seeing right now is a bit opposite from last year. Last year, everybody was raising rates. Now everybody's pausing or talking dovish. So I think if that's the outlook next week, along with the euro and the Aussie euro and the pound comparing to the Aussie and Kiwi, I also like to throw in the mix these Kiwi CAD and Aussie CAD, hoping, as you would say, Rob, just hoping that the CAD catch that lift. And if it does, if my premise is correct, I do like the risk to reward on these two pairings. Back to you.
I do like that Kiwi CAD trade quite a bit. It actually looks really good on the chart. So let's wrap this up. We do have a holiday shortened week in equities, not for Forex. It's going to be open all the time, as usual. I'm really looking forward to that Friday payroll report. So again, as a firm, we will be meeting live for that. Come and join us. We're trading it live. I think there's going to be a big move because it's the only place to play. So I think there's going to be a lot of people in there. As always, focus on the currencies that are moving. Avoid the ones that aren't, because you'll just get eaten up in the chop. We have to do a real good job of finding the right places to play because, again, the currency market, there's a lot of randomness. There's a lot of BS moves that just come out of nowhere. You don't want to be playing during those times. You want to be very focused on where you're playing and the right currency pair, which is why we always follow relative strength and weakness. Everyone have a great weekend. Great job in the first quarter. Looking forward to another good second quarter. Goodbye, everybody.